Hello, my name is Fernando Bender and I'm the developer manager at Greenfield. Today with our software Wild Horses we're going to make the analysis of the price of the Bitcoin benchmark as negotiated in BitMEX exchange for this Wednesday, December the 12th. Before we jump to the graphics, I'd like to give a big thanks to my fellow ambassadors for signing up to this channel, and a special thanks to Joaquim Roibal for accepting us in his development group of his arbitrage robots development. Also special thanks to Ricardo, also member of this group, that has given his time and his effort to make us up to the speed in this process. Thank you, Ricardo. So let's jump to the graphics. What we see here is the closing price of the Bitcoin benchmark in a daily basis, and they are framed according to how our algorithm sees channels that best describe its behavior. So we get the data from BitMEX, and those closing days are this black line. Why don't we use the candle? Because candle is 4 time series: open, close, high, low. 2 are synchronous, open and close, because they happen precisely in the same time. However, the maximum and the minimum, you don't know when they will happen during the day or during the candle time period. So we choose the closing, and that's what we monitor. And all our analysis is solely based on the closing of the day, because regular sampling of a system is the basis of discrete time control in all the microcontrol system worldwide. So this methodology has proved very useful and very robust and successful in control of power plants, control of complex systems, etc. It has already proved its value, and we are applying this precisely here in financial time series, specifically the Bitcoin price analysis. So what else we have in this figure? You can notice that the background is colorful according to blue tones. So how does that work? The prices are distributed in a range that go from below 3,500 until 5,500, a little up that. So what we do, the algorithm divides this range in categories, and it groups the prices within each. And the more populated a category is, the darker the blue tone that is assigned to it according to this scale. So we can visually understand what's the percentage of the last 24 days of negotiation and how these closing days were distributed in the price range. That gives an idea which region has concentrated more the prices, and in our interpretation that works an attractor. What does that mean? It means that without volume the prices will normally converge to it, and they need volume to leave it, be it leave it up or leave it down. So that's one point of our analysis. You might also have noticed this inferior color bar here. It is colored according to this scale, and that represents the negotiation volume on that precise day, and the color assigned to that day is according to how many standard deviations that negotiation volume was above the average. We're not interested in values below the average, we're interested in values above the average. So when the volumes are average or below, you will have very dark tones, like here in 17 November and recently. And when you have volumes like 2 standard deviations above the average, like in 21 November or 25 November, the color will tend to red, and values in between will be distributed linearly accordingly. So what does that shows to us? It shows the strength of the movement. For example, when you approach natural limits of expansion and retraction, on our understanding, first, these limits exist, and second, to be breached, they need volume. volume of negotiation, be it purchasing volume, be it selling volume, but you will need those volumes to break through those limits, and that can be indicated here. Another point, when you are in a trend without volume, you will follow the trend, and to reverse it you need more volume. And how does that show? Clearly we are in a downtrend for Bitcoin. So notice that whenever the volume disappeared, it was followed by a fall and greater volume, and it needed greater volume to make the breaking of this, like to reduce its speed, to make friction in the fall and reduce the level of decay in the price. Whenever this volume reduces again from a lot of volume, like 2 standard deviation above the average, to something more normal, the fall is resumed until it builds up volume to sustain it. And once it builds up again, like here, then you have some degree of recovery. But if that volume is not sustained, what you have is a decay, as it happened here when the volume lost steam and went away from the asset. Now, when it built again, the prices could sustain a level, and currently we are in a region with very low negotiations volume in regard to the recent past. So that's not positive for the price given its downtrend, which is currently on, and we expect because of that soon the prices will continue to fall. We cannot precise the time, but that's our expectation. To have a reversed, we need 2 things. First, more volume, and that's our view, and we need that the next top be above the top of this region, because we are, as we can see here, in a sequence of tops and bottoms that are in a descendant order. So we need to break through that to have a chance to later on break on to this channel top and make this point an upward pivot. So far, no sign of that. So let's jump to our explicitly forecast for today. I beg your pardon that this analysis is a little longer, but that makes time that we don't make an analysis in English. So first, forgive my English, and second, the time length. So this is here our forecast for today. What we have here, we have 2 lines. The black line, once more, is the closing price according to BitMEX. And the gray line is our corresponding forecast. How was this forecast built? Well, we hide the data, for example, of the model. So we show all the data until this day. And we ask the algorithm, what will be the next one? So he says this, and then we show him what really happened. Now he knows 1 more day. Then we ask him what will be the next closing. Then it says this, and then we show him the exact day, the exact value at that day. And then we ask what will be the next closing, and then it says this, and then we show him what really happened. Then we ask him what will be the next close, and then it says this. Then we show him what really happened. Like that. It doesn't know the next day, each new day, until today, when we ask him how it will close today, Wednesday 12, and it says this, and this means $3,355 for today, in a range, in an admissible range that goes from 3,272 until 3,438. So this interval here. So we can expect the price to be within this range. Currently, we are with 2.33% error on a daily basis, and that's equivalent to 80% of the daily average variation of the asset price in the same period, meaning our margin error is less than what it varies on day by day. So that's it. So our expectation is a maintenance of the price within this range. To build this information, only the closings of each day were considered in the last 59 days. How we reach this model that build this curve? We generate around 2,500 models, and we apply each of them, and we see which best perform in this manner. So this is the one that we show for you. I am sure you'll not want to see not just all of them, but those who really behave poorly. So this is our best pick from all this development and from all this optimization. Now let's jump to the market to see how it is right now. So what we have here, let us refresh to have a recent value. We are currently 3,483, the price of Bitcoin. Okay, we had a recovery. Yes, we had. We were about 3,400 yesterday. There was a gain of $83, $84 according to CoinMarketCap. Now let's have a look at the volume. Volume is very important. So what we see here, Bithumb taking once more the first place in the volume in the last 24 hours. So 1.4 billion. What's the normal range of Bithumb? Well, it recently has been within 1.3, 1.7 billion. What's the range of BitMEX? Well, recently, by recently I mean last 2 weeks, it has been between 1.7 to $2 billion in the last 24 hours as a normal basis, and in wild moves it has reached around 4 billion, 5 billion. So, and then gradually decreasing. So what we have here is a displacement of negotiation from BitMEX to Bithumb. Also Binance, that usually was the third place with 600 million, disappear from the screen. And Coinbit, that has gone away, is now back, and OKEx, that was in the fourth position usually, is now below to sixth ranked. So that's it. What we have is a weak volume, and according to our interpretation, this volume is not enough to break through the limits, the resistance that are being offered to the price of Bitcoin. And that's why we believe we will keep this level or go down. We don't have the strength to move up. Now finally, in the BitMEX order book, what we see here is that a lot of orders are building up in the range of $3,390. We see about 5 million, nearly 6 million. And why we group in each $10 to avoid spoofing, Now we acknowledge that it is falling now about $10. I think the downtrend may be started. We see a selling pressure, not much in the near range. We see some pressure here around 3,500. So that's what we believe is where the prices will suffer a great resistance according to this level. So that's it. This is our analysis for today. We expect the prices to be within this range that are currently trading with a bias for downward. So that's it. Thank you very much for your time. Thank you very much for your attention, for signing up to our channel, and don't forget to activate notifications to be informed of videos like this. As time progresses, our videos will be a little shorter and will be more focused, but it's now we are entering this new phase of videos in English. Once more, forgive me for any mistake. And it will be more clear what is information that we are delivering here. So we believe it will be not just easier for you, but useful as well. Thank you very much. Till the next video. Bye-bye.